Okay, good evening, good evening. If you guys can hear me, can you all please help me type what did you have for dinner? Don't know why every time I ask this, right, there will be like a group of you guys say haven't eat dinner. Then it's like makes me feel like Singapore is so or like our region is really so stressful. Or are you guys like having a good diet? Like a diet plan. Nasi Padang, roti prata. Thanks, Vera. Oh, mee sua, mee sua. Okay, okay. Oh, daily bowl. Is it the what do you call that? The kebab thing, right? I like that a lot also. Not yet, Cheryl. Okay, so y'all can have dinner at the same time. And tonight, right? You're in for a treat, guys. You're in for a treat. Okay. So all of you can hear me, okay. So I mean it's just to sound check, sound check. Since you can hear me, we are not talking about dinner. Tonight we got back Brandon. Okay, so Brandon, as you guys, how many of you heard of Brandon's sharing before? If you heard of Brandon sharing before, please from a scale of 1 to 10, please rate how much you learned from him or how valuable it was. So anybody who put less than a 5, you will be kicked out of the Zoom chat. No, I'm just kidding. I'm just kidding. Okay. Okay. Anybody have not heard of Brandon before? If first time, can you help me type question mark? Question mark. Oh, great. Okay, so some of you have not met Brandon. Wow, tonight, you guys will be very happy that you came. Okay, one thing about Brandon is just very quick introduction before I get him up. Not going to spend a lot of time talking. So Brandon, right, he was an ex-institutional trader for JP Morgan, Citibank, Barclays, and the last time when he came, one key takeaway is he shared the psychology of how institutional traders operate. So whatever that we imagine on the other side, right, he is from the other side, and with that, he has gotten certain I would say okay, I would say insider knowledge, but he knows both sides, both retail and institutional, and now he's on his own trading. So one thing that he does, right, is he also leverage on certain structures on prop firms to trade for a living. So today he'll be sharing with you some portions of that on how you can do that as well. And at the same time, he want to share with you how to win the prop firm also. So when he shared when he said he's gonna share all that, right, I was super excited. How many of you feel excited? If you're excited, help me type X. If you don't know what's prop firm, you'll be again in for a treat. You will suddenly realize there's like a low risk capital that you can access to maybe trade even up to a couple of hundreds of millions. Okay, that's what he did, and that's what you can learn also. So without further ado, please help me welcome Brandon by typing CCC. Okay, which is clap. Okay, in our language. Okay, so Brandon, let's see.
Yes. All right. Welcome, guys. Everyone can hear me clearly?
Yes, loud and clear.
Loud and clear. All right. Awesome. Great. All right, guys. Welcome to tonight's chat. All right. It's good. It's quite exciting. I've actually some of you have actually joined my VolRX chat. We've chatted a bit. I've gotten some feedback to actually sort of like tonight's presentation actually is based on some of the questions that were asked in that chat as well. So that's very interesting. And some of these questions I aim to answer tonight. All right. Especially with regards to how you can actually go about trading, and how you can actually use certain structures to your advantage, especially if you do feel you are slightly disadvantaged because you don't have, say, the capital that some of the institutions around have. All right. So all's good. Thank goodness we are in 2026. We have a lot to be grateful for. There is a lot more access to a lot more things than we had back in even just 5 years ago, even 10 years ago. All right. So we have an amazing amount of access today. All right. So the firm that we're gonna that I'm gonna be presenting on it today is actually Veridium. This is an equity, futures, and FX and CFD prop trading firm. All right. So you can go ahead and scan the QR code. All right, and let me know if you have any issues. But you should be able to access the website. But if you can't, don't worry. I will get the admins to sort of look into it and then resend the URL again later. All right. So without further ado, I'm going to cover 3 secrets tonight. All right, to scale up your capital in trading. All right. The first they're going to go through quite fast. The third is where a lot of data is going to come in. Okay. So I think one of the key questions that a lot of folks have asked is, what type of strategy should I adopt or use Sean and his team, for example, talk a lot about all kinds of strategies, all kinds of methodologies you can use to trade, to create algorithms. The question then is, which one should you do, right? And a lot of that depends really on who you are. So a question that came up, for example, in the chat was, what kind of option structures should I trade? What kind of algo strategies should I do? Really, it also is an important question of who you are as a person, what you psychologically feel comfortable with. Now, broadly speaking, there are three main types of traders in the market today. All right, the mean reversion guy. All right, the mean reversion guy tends to see things early. All right, or the potential in a turn which is not quite there yet. The breakout trader and the trend trader do not try to predict a turn. All right, whereas the mean reversion trader will try to predict that turn. All right. The thing about mean reversion strategies is, of course, a lot of people like them because they are, they're very high win rates. So that feels very psychologically comforting for a lot of people. All right. But they do have low risk to reward ratios. All right. And they are very good, all right, for choppy environments, but they cannot win big in bull or bear markets. All right. Actually, the other drawdown, which you will see later, is that you will see that they tend to have extremely high drawdowns in very severe bear markets. All right. So we'll go through that later. All right. Then, of course, it's the breakout trader. A lot of the YouTube content today, a lot of the traders on YouTube, you will see that they teach you a lot of breakout strategies. So what they do is they wait for the turn. All right, they prefer to wait for confirmations. They don't really front run, and that works quite well in equities. All right, and I'll show you some setups later that are breakouts that you can use even in prop firms that you can do quite well in. All right, the win rates are naturally lower. All right, they're about 45-55% win rates. The good traders get it up. I work with a prop firm as well. That's based in New York, and the elite traders get up to about 58-60% in terms of win rates. All right, the risk reward ratios are a lot higher because when the breakouts happen, you get usually 1:2, 2 or 1:2.3, 2.4 type of setup. All right, and then of course there is the surfer or the trend trader. Right, many of you have algorithms tied to trends. The win rates are naturally a lot lower. You are not waiting for the breakout. You are trying to detect the regime. You're trying to determine if there's a continuation. All right, surfing a trend, and of course that is something we will talk about as well. But trend traders usually very huge risk to reward. 1:3, 1:4, 1:5, but win rates generally less than 40%. All right. That's quite normal. So in terms of algorithms, trend trading algorithms are generally good in terms of helping you with your psychology because the skew of trend following is actually positive, meaning on a many trade basis over a wide distribution, trend trading should actually be profitable for you. All right, but it is psychologically difficult because you take a lot of cuts or small losses before you see those big winners. All right. In terms of who are the biggest P&L guys I've ever seen in my entire life or career at real prop desks, at real prop firms, two kinds. The mean reversion guy so far is one of them. Seen legendary traders make over 100 million mean reversion, but all-time records set at New York desk, the prop firm I work with, set a record 28 million in P&L. That guy is actually a trend trader because, as we know, last year was a raging bull market. All right. So again, if you are a trend trader, mean reversion trader, breakout trader, all of them work. Okay, but you just have to be aware of the stats. All right. So you gotta know who you are. So great way to find out who you are is to actually kind of look at a chart. So this is a chart of the S&P 500. So as you can see here, all right, the mean reversion guy, right around this point here, all right, will start to say, hey, I think the market is kind of coming into a support zone within these two blue lines, all right? I think it's kind of coming in. And I'm going to anticipate buying into support, making a turn, all right? And then as it turns, all right, the breakout guy actually does not come in usually until this point here, all right? And this point here. So you see it comes out here, moves up to VWAP, goes sideways. Breakout guys love sideways movements. The trend following guys usually tend to be a little bit later. They tend to come in around here. All right. After you get an initial continuation, a break over VWAP, which would then increase the probability of the bullish trend continuing. And usually when the trend following guy starts to come in, the mean reversion guy starts to scale out. All right. This is something that's very interesting because of the three trader archetypes that we have, all right, every one of them thinks the other two are completely insane. All right. Meaning the mean reversion guy thinks that the breakout guy and the trend following guy are crazy because they enter too late. The breakout guy thinks that the mean reversion guy is reckless because he takes positions too early, and the trend following guy is too late. The trend following guy thinks the first two are insane because there is no confirmation of a trend. Not all bullish factors are in your favor, or not all bearish factors in your favor before you take a position. So who is right? The answer is all of them can be right. It's just that they will be right at different points in the chart, and depending on market regime, all right, it will determine how they do. All right, but we'll talk more about market regime later. All right. So up to this point, before we go into secret number 2, anyone have any questions before I continue? Yes? No? Or we can handle that at the end. All right. If you don't have any questions, just note down your questions first. We'll answer them at the end. All right. So, all right. Awesome. So secret number 2 is actually a very simple secret. The question people always ask is, should I trade the same thing every day? Or should I look at different things every day? Actually, in most professional trading firms, as an individual, you have no edge if you trade the same thing every day. You need to actually find the instruments that are in play. Why? Because instruments that are in play, all right, have liquidity dislocations, all right? Meaning because of some sort of specific news, a lot of positioning is offsides, and therefore a lot of positioning is shifting. And when positionings are shifting, that's where you can make money. All right. So it's not a very hard concept to grasp. All right. Different types of earnings events, most common for stocks, for example, earnings news, all right, company announcements in terms of restructurings, activists, mergers, so on and so forth. Macroeconomic data, for example, inflation reads recently have been very hot. All right, news from Iran have been very hot in terms of like moving oil prices. So oil has been in play, for example. All right, central bank policies. So you would see rate sensitive equities, for example, react a little bit more to central bank days, especially when the inflation prints come in hot. And then you have a sort of like, central bank day coming up. All right. And of course, election results, very big mover in markets. Broad markets move a lot as a result of election results quite often, especially the broad indices. All right. Now, there is a good question, and I'm going to get to it. Won't it be too late by the time the news is released? The answer is no. All right. Especially in equities, and you will see why. But let me just show you a quick chart of what happens when something is in play and when something is not in play. All right. So what we have here on the left side is a chart of Figma on earnings day. All right. And you can see Figma, actually what you don't see before this here is Figma was trending up in the pre-market. All right, and actually we'll revisit this chart later on. All right, at the open, it stuffs, but because of institutional buying, you can see a huge surge. Now, this is easy to trade because the momentum is fast. All right, it's in your favor. You can actually take a trade called a back to open here. All right, and it will do very well. Very nice risk reward, and you can see it serves the 9 EMA nicely. Nice algorithmic buying all the way up. All right, before it starts to turn, and the 9 crosses 21 where you would exit. All right, so this is what, when something's in play, you can actually have your plays come and go relatively fast, and it's easy for you actually when you trade stuff like this. Now, this is CoreWeave on the same day. All right, you can see that essentially it was flat. All right, now, arguably, some people will say, and yes, to Sean's question, this is the 1 minute time frame. All right, this is flat, which means this is really, really, really hard to trade because whilst you say, I can catch this move, I can catch that move, most of the time, chances are you are actually going to be on the wrong side of those moves. All right, this is fundamentally chart. All right, and in chart, most people lose money. Trend following algorithms lose money, especially in this environment. All right, okay, great. So up to this point, things have been quite simple. Everyone understand and everything good so far? If you can type a 1 just to let me know that you have not been lost. And yes, EMAs are used quite often for professional prop desk. All right. All right. I'm going to get into more heavy stuff. So if you guys can just acknowledge that you are still not overloaded, we will get into some really, really heavy stuff shortly after this. All right. Okay, great. Now, how many of you want to actually know how you can apply some of the algorithmic trading you've learned from Sean and all to prop firms, and how actually you can win prop firm challenges? If you want to actually know that, type 2. All right, and now I'll tell you how exactly you can use prop firms. All right, there is a place and time to use prop firms. All right, cool. All right, so broadly, again, 2 types of trades that we see a lot of, especially in algorithmic trading. Whole bunch of academic articles here. You can have a look at them. I believe the slides will be posted later. But generally, you see, win rates for mean reversion are above 60%. All right, on the left side. But huge problem with anything that is mid latency, which is during a huge sort of like 5, 6, 7 sigma type move to the downside, say like during the GFC, drawdowns are huge. All right. How many of you know Renaissance Technology and Citadel? Just type a Y if you know them. 2 big quant guys, Renaissance Tech. You know them? Great. Okay. Legendary guys, right? Even they lost a ton of money. Citadel actually lost 60% during the GFC. All right. Not many people know that, before they actually switch their algorithms or they change their algorithms around. All right. Now, later on in the research, they found that the only timeframes where regimes were stable and mean reversion continued to work were actually ultra short timeframes. So anyone want to take a guess quickly? What's the average holding time today of a Citadel or a Jane Street or a Renaissance Technology mean reversion trade? Just type it in the comments. I'll give you a clue in seconds. 60. Other guesses? 5, 30, 5 minutes, 5 minutes, 5 minutes. Okay. Great. Okay. Awesome. So we have a couple of answers. The answer is actually most of the average holding time is between 10 and 30 seconds. All right. Does it sound like insanely short? Yeah. All right. 10 to 30 seconds. All right. That's the average holding time of a Jane Street algorithm. All right. When it comes to a mean reversion trade, because only on ultra short time frames, all right, have they found, all right, that mean reversion or regimes are stable enough for mean reversion to work. And the answer, yes, it is high frequency trading. Yes. So for example, Renaissance technology actually takes over 8,000 trades in a day. All right. And about 40-50% of that makes its mean reversion on a 10 to 30% time frame. They have rebates and a lot of other stuff with regards to exchange. All right. So hold your questions. I'll get to some of them later. All right. Now, trend following tends to do, you see them a lot in, funds like Man Group and all these other guys, and a lot of long only trend following funds. Win rates generally a lot lower in the 40%, sometimes 30%. Huge risk to rewards. All right. And all right, Sharpe ratios are just under 1 usually. But overall, positive skew, meaning on a large distribution of trades, generally the trend or the trade is profitable or the overall strategy is profitable. All right. So one very good question. How do you backtest? How do you do all the things that these guys do if you don't have the money and don't have the budget? And that's the question we're going to answer. All right. So quickly, mean reversion. So there was a question, what's mean reversion? A mean reversion trade would be something like, let's say something moves 2.5, 3 standard deviations away from the 20 moving average. You take a long, and then you trade it back to the mean, and then you square it. All right, that's mean reversion in short. Now, mean reversion, HFT or 10 to 30-second timeframes are actually the most reliable and stable on a ongoing basis. All right, anything beyond a minute has been found to be susceptible to huge drawdowns when it comes to 6-7 sigma moves. There have been a couple in the 2010s, the GFC, Brexit, a couple of them. All right. Now, if your mean reversion algo doesn't trade on high frequency, actually regime detection is your only other alternative. If you have a trend following and a mean reversion algorithm, then regime detection becomes a very important piece. But it is expensive to develop. As an idea, in terms of the spend, all right, 2 Sigma, DE Shaw, Renaissance Citadel, they all spend somewhere between 30 to 50 million a year just for the team to perfect their regime detection algorithms. There's been a lot of stuff on X, for example, where you just use Markov chains and you can create the same thing. Yes, Markov chains work, okay, and hidden Markov chains work, but it's not so simple. All right, I'll just keep it at that. The big issue with regime detection algorithms and why people spend so much money and why the biggest funds spend as much as they do is because there's a 30 to 40% error rate in regime detection algorithms in general. All right. So intellectual honesty is always required if you say, I have a great regime detection algorithm, but you need to actually acknowledge the fact that you may be 30% off to 40% off, all right, in terms of your regime detection algorithm. Especially if you find that you seem to, your algorithm seems to work for a while, and then suddenly you seem to keep having a losing streak and your edge seems to deteriorate, you need to ask that question very seriously. All right? Okay, great. So now that I've given you some big numbers, how many of you still feel like trading or still want to trade? All right, don't worry about it. Yeah. All right. There is a solution. All right. And actually, most of you are already doing it. So inside the chat, many of you actually do use trend following algorithms. And actually, that's the right algorithm to use for your own capital. All right. How do you remove the regime detection issue? Is literally using a prop firm. All right. Prop firm, if you look at the way challenges set up, the risk versus the profit targets, all right, mean reversion actually does very well as a base hitting strategies against the rules that they have. But there's an advantage, all right? So you can, again, guys, if you couldn't access Veridium, scan the QR code. So what belongs in a prop firm and what belongs to your book? That's an important question to ask, right? Okay, so I'm just going to quickly move to this. All right, so what actually belongs to your personal trading capital and your personal trading book? Option strategies, things like multiple entry iron condors on the intraday 0 DTE, all right, leaps, so on and so forth, and your trend following algorithms. Those do well within your own capital, all right? Just as a guide, data harvesting actually has a higher Sharpe and active data harvesting management, which is active options selling management, has a higher Sharpe and a higher return overall versus mean reversion in general. All right. But mean reversion spot trading, great to use inside prop firms. Why? Because what's the problem with mean reversion? High kurtosis, high heteroscedasticity in very volatile environments. All right. So high win rates, you win, and then suddenly you go, boom, you explode. All right. That's been the experience of some people that I've talked to. And it's actually a very normal experience. It's part of the mathematical design of a mean reversion strategy. It will explode at some point in time, unless, again, you can trade HFT. All right. Which that's not easy because that will cost you a couple of $100 million to actually get on. All right. And even then, market making is still the most profitable of all the mean reversion strategies that I use within the high frequency firms. All right. Now, in terms of using a prop firm, so there are several strategies that do well: mean reversion, pairs trading. All right. Certain scalping strategies. All right, which we'll get to also later. And of course, if you want to test out trend following, let's say you have hypotheses of certain trend following strategies and you're not very sure, you don't want to risk your own capital, prop firms are the best place to use them. Why? Because you only at most lose the eval fees if you blow up. All right, your own capital, just to give you an idea, you can draw down 40-50% on a mean reversion algo if you go and fall asleep on it in a very, very bad sell-off regime. So if you had a 3-4 sigma move, all right, to the downside, say Trump suddenly bombed Iran or Trump suddenly bombed Cuba, like Cuba's the next target, right? And you have a 3-4 sigma move to the downside, all right, your mean reversion algo will take a lot of losses because it will keep seeing a deviation from the mean, attempt to revert that mean and get stopped out again and again. You will die from 1,000 cuts, all right? In a prop firm, that bleeding will stop at a certain point because you will be taken out anyway. All right. And what do? You just reset again. All right. So in all terms, if you want to get to a prop firm or use prop firms, right, such as Veridium, mean reversion algorithms, spread trading are actually your best way forward. All right. So again, just to revise, all right, use prop firms for base hitting strategies. All right. Keep A+ setups, meaning let's say you see a huge setup and you really want to get size behind it, use your own capital, especially when you know that, hey man, this is so oversold. There's no way, say, I don't know, Apple could trade at this price or the S&P should trade at this price. Use your own capital. All right. What prop firms do is they help you not deplete your mental capital when you want to take those A+ setups because you are using a prop firm to do it. All right. Also, when it comes to prop firms, you will 100% lose from time to time because you will blow up from time to time. And yes, Veridium is a prop firm. All right. Which offers equities, futures, and FX and CFDs. Okay. Now you will lose a limited amount from time to time, but your psychologically will generally be preserved because you're saying, okay, it's cost of doing business. I lose $500,000, trying these strategies out versus say, like I lose 30, 40, 50,000 on my personal capital account. All right. Now forward testing is a lot cheaper on a prop firm than it is on your personal account. We had conversations about back test and forward test. The issue about back test is that you can actually be back testing in a vacuum. Forward testing tends to be the best way to actually see if a strategy will work. But sometimes if you don't want to lose too much money on a forward test, use a prop firm. And if the forward test works, you get paid for it very well. And again, mean reversion, high kurtosis strategies do extremely well on prop firms. From time to time, you'll blow up, but you'll be able to pass the challenge a lot of the time. All right. Breakout traders do not as well in prop firms. Trend traders or continuation traders do quite well in prop firms in general. All right. Now, all right. So essentially, just to summarize, so split a certain amount of your capital for your own personal trading, options, trend following, algos that you are certain of, use your personal account. All right. And then, of course, everything else, small budget, the forward test, mean reversion strategy, spread trades, all these things need a lot of amplification through leverage, all right, to actually trade. That's where the prop firms come in. So you don't eat up your buying power in your own account. All right, you save it for your A+ setups in your accounts. All right, and that's very important because it preserves mental and financial capital. All right, now, all right, I'm going to go through a couple of strategies. All right, right now, with regards to prop firms and how many people are interested in that. Type of 1. All right. How do you win? What are some great strategies? Because the challenges are not easy, are they? Awesome. Great. I got some of your attentions. Awesome. All right. So, number 1, if you join a futures challenge, all right, one of the best trading strategies is to actually trade cross-asset front-month futures. Now, the interesting thing about mean reversion is that if you mean revert on a single thing, like say the ES, all right, or the NQ, or say a currency, all right, and you are caught in a 5, 6, 7 sigma move, you're likely going to get wiped out, all right? But what's interesting is spread trades actually tend to mean revert a lot better, all right, versus just pure directional mean reversion. All right. So if I wanted to build a P&L for a challenge in a futures prop firm, or in a futures challenge, or in an FX and CFD challenge, or in an equities piece, but equity is slightly different, I would use spread trading for 50 to 60% of the profits, and I would max leverage it. Some of the popular pairs would be, say, gold, silver. Here's a very, 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 very simple chart of the gold-silver ratio. All right, how many people are familiar with this? Just type of Y, gold-silver ratio. How many of you have actually watched this or seen this? All right, just type of Y quickly. Awesome. Okay, so what's interesting is if you look at the gold-silver chart and you just drew Bollinger Bands with 2.5 standard deviations, all right, and you have a 20 moving average as the centerpiece, look at how nicely, most of the time, the spread hits the top of the 2.5 standard deviation Bollinger Band and reverts toward the center line, all right, which is the blue line. All right. Now, gold, silver can be traded on futures or FX and CFDs. All right. The FX and CFDs, you can hold the trades for more than a day. All right, because it's a swing trade, but futures, you got to close intraday. But see how nicely they tend to mean revert. All right. So you capture small amounts, but on leverage, they go quite far. Another pair on the FX CFD front. All right. Also, 2.5 standard deviations on the Bollinger Bands, 20 moving average. Again, I'm just giving you sort of like a guideline, but do optimize for the various pairs. All right. I can't give you the answers exactly as to how it's optimized for obvious reasons. All right. But you can see ETH BTC. All right. If you try to trade Bitcoin and ETH, and you try to, make your way past the prop firm challenge with just trading directionally Bitcoin and ETH, I am quite sure that 60% of the time you will fail. Okay. But ETH BTC as a ratio, look how nicely it touches. All right. On the chart, every time 2.5 standard deviations, it reverts. Now, I did say, okay, that there will be times where you'll get taken out. So the red boxes are those times where you might have tried a few times, or if your algo tries a few times to trade, all right, you might actually get taken out because the thing kept moving against you. That's normal. But again, to the point, if you're running options and trend following, you don't want to be taking drawdowns on this strategy overall, right? And having your buying power taken away from that. Preserve the buying power capital in your trend following and options account, and use your prop firms to trade the ratios. All right, sometimes they'll blow up. It's a cost of doing business, but much better than losing a large quantity of money in your account. Again, another pair, ESNQ. All right, on a day where market is a raging bull market, text in fashion, the NQ is going to outperform the ES, and vice versa. By the way, guys, just type a 1 if you don't know how to actually bring up ratios in your charts. Just type a 1 if you don't know how to bring up ratios in your charts. All right? Okay, quite a number of you. Cool. So I'm going to actually show you how to type a ratio in your chart, all right, from here. All right, just give me a second. Okay, so all you have to do is actually know, all right, the sort of symbol. So let's say you want to trade WTI, right, futures. So WTI is actually CL1, all right. Okay, so you can see crude oil futures, CL1 here, all right. And let's say you want to trade it against nat gas. Just type NG1, all right. That's actually the nat gas futures, all right. You can see here, these are the continuous futures. You can actually just type CL1 exclamation mark slash NG1 exclamation mark, and it'll bring up the ratio for you. All right, TradingView will do that automatically for you. You can fit anything and you can start trading immediately. All right, so that's actually how you do ratios. So you can even say, hey, do they have SPY slash, IWM, right? And it would have that. All right, so you'll be amazed how TradingView does all these ratios for you.
Brendan,
All
sorry,
right.
Brendan, if I may ask, right? So if we pull this out, I mean, I can understand like they pull out and then they show the chart. But when we execute the exact trade, we like how we still have to like it is not a particular way we can enter into the trade, correct?
Yes. So usually what spread trades do, right, is you're looking for a big move against the standard deviation bands. So like for me, I find that 2.5 standard deviations.
Pair trade is a pair trade. So
Yeah, it's a pair trade, correct.
I actually buy one and short one. That's what we mean, correct?
That's correct. That's correct.
Okay,
So
got
like, for example, here, all right, SPY IWM hits this part of the Bollinger Band, right? So you would buy SPY and short the equivalent in notional in IWM and trade the ratio back towards the mean here. That's exactly how you do it. You can actually put this inside your algorithms as well. All right. Okay. So pair trades do extremely well in prop firm challenges because the volatility usually doesn't blow up in your face most of the time. All right. Okay. So again, another popular pair, crude oil against RBOB and heating oil, right? RBOB futures, prices at the gas pump and all that, they were going up during the Iran crisis. You can see very nicely against the 2.5 standard deviation bands, okay? Of course, your signal, you want to optimize for your time, change the moving averages, see what works best, back test it, and then forward test it on the prop firm, all right? Can't give you all the answers for this one. Okay, then equities. What are strategies that work very well and actually have decently high win rates in equities? I'm going to go through two. All right. So this is a mean reversion strategy. All right. How many of you trade mean reversion on equities? Just type a 1 in the chat. Just let me know. Okay, great. Awesome. Now, I just want to say equity mean reversion is one of the age-old strategies that a lot of people use. I unfortunately, I actually know a hedge fund manager who trades mean reversion on equities. He does stat up. And his fund didn't do too well because for equities, I would say pairs trading, be a bit more careful because equity can gap up on news. So equities is probably the only asset class. All right, I would say be a little bit more vigilant of the news and what's in play. If a stock is in play, you may not want to use it for a pair trade, but you can actually pair trade equities as well if you want it. All right. But equities, let me give you some strategies that work very well. These are used at professional prop desks. All right. In fact, some of the biggest P&Ls have been put up from these two patterns alone. All right. This is known as this is again a mean reversion chart. For equities, intraday, this is a 1 minute chart. Okay. This is Tesla. All right. You can see 2.5 standard deviations, hits the Bollinger Band. What you are looking for is not to take the position where the circle is, but for it to come back and reclaim the 9 EMA and for the 9 to reclaim the 21. Then what you want is to have a sideways pattern for about 5 minutes. Okay? 5 minutes helps a lot of consolidation and digestion. All right? And it gives you an indication that, all right, this is likely the end of the selling pressure. There should not be new lows. Your risk, if you took any trades, should obviously be at the bottom here, all right, for the risk of the day. And the moment it starts to break out of this range, you can take a long position. Try not to anticipate this one and then square it around 2-day VWAP, 2-day anchored VWAP on the chart. All right, this is for 1 minute. All right, this, by the way, is used by a lot of prop firms. All right, professional prop desks in New York. One of the most traded patterns. This is actually called a backside trade. What they're doing is looking for something that gaps down, gets oversold, the selling algorithm's done, bang, the buyers start to come in. People say, hey, I don't agree, disagree, I don't agree with that selling algorithm. I'm going to start buying this up. Other institutions start taking over. And then you see the balance here in the box. That consolidation is your sign that the sellers have most likely exhausted. All right. And then you are looking for the buyers to take charge. All right. Very commonly traded pattern. This is called the backside. I'll cover more of these patterns in upcoming talks. This very common trade that happens at the open. All right. This is called a back through open. Again, one of the most traded strategies, all right, amongst prop desks globally, all right, especially in New York, all right. I know a lot of guys who trade this strategy again and again. They make millions from this, all right? But you can use an algo to execute it, or you could use manual execution here, all right? Actually, in this case, manual execution has a slight edge over algos because there's a bit of dislocation usually at the open. All right, so what you're looking for, this is the chart of Figma. All right, sorry. Figma reported great earnings, it gapped up, but what usually happens very often during, say, earnings, after something has gapped up, is you start to see a profit taking and the first minute candle. Boom, market opens, see a spike, and then you see a stuff, and immediately it starts to come down. Bang, 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 bang. And then people say, oh shit, it's over. This is actually just profit taking. None of these guys are high conviction sellers, all right? What you are looking for in particular is a sideways pattern like this at the bottom. It must be at least 3 minutes long, all right? For 3 minutes, 3 to no more than 10 minutes long. Usually more than 10 minutes, you have a problem. It breaks down again. Below 3, usually that's where it's more reliable, all right? And then the moment it starts to break out of this range, you aggressively pay the offer and you take the trade. All right. You usually will square the entire position at the opening price. All right. This is Figma. This is called a back through open. Some people call it a gap give and go. This is a very commonly traded pattern. You can literally repeat this every day by looking at your stock scanner, finding the stocks that are gapping up on the day with positive catalysts that you grade as a high grade catalyst. all right, and watch for this pattern at the open. It happens again and again and again, all right. It's repeated again because human behavior doesn't change. All the other guys will want to stuff at the open. Now, the flip to this is called an opening drive, where it drives straight up and it goes straight up. And usually you can see that building in the chart in the pre-market. So the yellow side is the pre-market. It just starts building, and you can see if you read the level twos, all right, or you're looking at the level two, you see a lot of the tapes rolling. You see a lot of momentum, a lot of buy orders. You know that most likely you're going to have an opening drive to the upside, all right? But again, pattern that repeats again and again at the opening drive at the open. Best part is you can trade all this at the open within the first hour, all right? The back through open, the gap give and go, and the backside tend to happen within the first 30 minutes of the New York session, all right? So, okay, hope you guys got this pattern, but don't worry if you didn't get it. I will hold a lot more seminars on this to go through the patterns again in deeper detail. All right, sounds good? All right, awesome. Now, how many of you are feeling a little bit more confident about your trading? Just type Y. Just type Y. If you're a bit more confident with trading, you want to test it out. You want to say, I want to go. I want to make a difference now. I want to actually try this stuff out. All right. Cool. All right. So, two things. All right. Okay, actually, there are three things you guys got to do. Okay. I know Sean is just trying to hold you guys back a bit in the excitement. First and foremost, we have a competition for Veridium. All right. We are actually going to give challenge prizes away. All right. Meaning you can get $100,000 accounts. There is a fee for sign up, and the fee is paid back. All right. With the discount codes, you get a 30% sign up, 30% discount, which would be equal to or more, all right, than the sign up fee, all right, when it comes to taking a challenge. This is entirely simulated. Yes, it's virtual money. Now, the challenge has drawdown limits so that people can't YOLO, all right, meaning they cannot say, all right, let's just go max long and see how this goes. Yeah, you actually have to trade properly to win. So this challenge is a little bit different. All right, we are using FX and CFDs, so you can trade all your indices, your FX, your commodities, as well as ETH and Bitcoin. All right, but you cannot go just max long on something and hope you will survive. You will hit the drawdown limit and you will bust. All right. So the drawdown limit is 5%. All right, and by the way, 5% is something that hedge fund pods use. So we want you to actually start trading like a professional from day one. All right, and again, giving you a lot of tips on how to move this and how to actually get this done with things like ETH, BTC, gold silver ratio, so on and so forth. All right, so you can actually try some of this out in the challenge. All right, so scan the code. All right. Join the challenge. No options trading for this one. All right, there are reasons for that, but this one, no options trading. Okay, and then, all right, second thing you need to do is join the VolaRex chat. All right, I will be updating a lot more on the talks I'll be giving in the future there as well. All right, so Scan is a Telegram chat. The platform we will be using for the challenge, all right, or the competition will actually be GUI Trade at this time, all right? Not MT5, GUI Trade, but very easy to use, all right? So do join the VolaRex chat if you haven't joined it yet, because I will be announcing and I will be engaging you guys and getting you guys to actually start trading a lot more in the chat after this talk, all right? Awesome. Algos should be allowed. So if you have issues, do let us know. All right.
So this one can use automated trading as well. Algo is allowed, you mentioned. Sorry, I think
Algos are allowed. Algos are allowed. But if you have any technical issues connecting your algo, just let us know. This is for the competition. You should be able to use algos. Or if you want to, you can always use manual execution, but manual execution, but algo sort of signals. All right. Cool. Don't worry, I will be going through a lot more of these strategies in the days to come with a lot more talks. All right. So don't worry about that. But do join the chat if you haven't joined. Now, the final thing we need to do, all right, and the most important thing, one of the reasons why institutional traders do way better than retail traders is because they form pods, all right, and they create tools together. All right, they form strategies, they discuss ideas, and they create tools together. So I want to ask you guys, just before the next speaker comes on, type of 1 if you have a trading pod, type of 2 if you don't have one. All right, just very quickly, type of 1 if you have one, type of 2 if you don't have one. So a lot of you don't have trading pods. All right, so what I'm going to do is I am going to join the VoloRx chat. I'm going to start organizing you guys into trading pods. All right. A trading pod is about 4 or 5 people, usually no more, where you share strategies and you trade and keep each other accountable. All right. Now, all twos. All right. So one of the biggest edges institutions have is they have combined brain power. All right. And that's what pods will do. So the first order of business is get you guys organized in a pod. The second order of business is for you to actually listen to the next speaker who will be teaching you how to use AI to create some of the tools and the strategies you will use for your trading. So are you guys excited? Type of Y if you're excited. All right. AI coming up. All right, Sean, we ready to bring our VIP on?
VIP, okay, great. So we have 2 VIPs today. And how many of you learned a lot and you want to learn even more from Brandon? If you do, please help me type B and then type how much you want to learn from him, like in terms of like a scale of 1 to 10. Hey, by the way, really do join his Telegram group. I think those who join his Telegram group, you all know that he does answer your questions. It is pretty amazing now. So he doesn't really have like classes like what we do. You cannot find him anywhere else. Like he doesn't really even do YouTube. So this is the time to learn from him. And the second way to learn from him is to go and go to his Telegram group and also ask more questions. And also for those who are ready to, or in fact, if you are not really ready to invest or trade your money, right, doing a prop firm challenge is I would say low risk way lah. So you all can consider also. Okay, we will discuss more about that and see how we can also form into pods and do the challenge also. I think maybe sometimes forming groups, having some like a accountability will be quite fun also. Do you guys agree? If you guys agree, help me type A. Okay, so do scan, get the information first. Then after that, we see how can form groups to do that now. Okay. So thanks a lot, Brandon. Thank you very much. I know that he has to go and he has to go for his trading already. So thank you very much once again. We will definitely bring you back. We will go and digest. I'm still digesting your pairs, which is very interesting. Usually my pairs trading, it is not intraday, but now wow, gives me a new perspective. So I don't know whether you all caught that, guys. Time to do a lot of back tests, time to actually put this into action. And since the prop firm can do algo, maybe we can also see how to like put the algo into the prop firm. Okay, Ken?
Yeah, and not only that, because you are all part of Sean's group, I have negotiated with the prop firm to actually give you guys a huge discount, 30% discount if anyone wants to do a challenge. Join the VoloRx chat, and then I will actually give you the code for the 30% off for the challenges as well as even the competition. You can use it on that. All right.
Okay. So quickly join the group. Then after that we can see how to like it is pretty good if you can get a discount for the prop firm. Your risk reduced by 30%. So because the max risk you lose is how much you pay for the prop firm. I would say the TAF, right? So some of you taken it before. So now at least you have more strategies to overcome all this.
Yeah. I only trade off any prop firms. There are no prop firms that do options right now. There is a reason for that. It's because of regulations and broker-dealer relations. But if you join my VoloRx chat, I will teach you a little bit more about options from time to time with some of the talks. So I don't charge for any education. I give all my education away for free.